Welcome to my channel. I'm Dr. Romano. In today's video, I want to go over my market predictions for the first quarter of 2023. As you know, I have made many predictions on YouTube in my YouTube videos, and all of those predictions came true by a 100% accuracy. You could watch all my videos and just look at the charts, what I'm talking about. Either I'm talking about the Dow Jones Industrial or the SPX, which is the S&P 500. Those are two major market indicators that I use for my market predictions. Secondly, gold and silver. You could go back in time and you could guarantee that every single time period when there was going to be an actual market collapse or a market pullback, the gold prices start to spike. And yes, over the past year or two and our decade, we do have another issue that's brewing, that there's two countries out there and a number of other countries that are going to follow them, meaning Asia and the northern part of Asia, another country. I don't want to keep talking about this in my videos because it pushes down the amount of people that watch my videos. Before we continue the video, please remember to do thumbs up and subscribe to my channel. It's right there. It doesn't hurt to press it, and that really helps me out because I'm giving this information to you for free. Thank you so much. Because you know what's happening, that they are going to create their own currency, whether it's in a cryptocurrency format or the currency is going to be backed by gold and silver or have some sort of quality to it. You know, if they do it, then the U.S. government is going to do it too, and they have to do it even better. And so this is my prediction that they have been buying gold, and they have been buying gold because a lot of the governments in the 1990s, they dumped their gold reserves, and that's why gold went down to, what was it, $600? And because they created a more fiat currency. But after 25 years, almost 30 years, they can't continue that fiat currency because it creates too many ups and downs in the overall country, etc. Now these ups and downs are kind of over with. The real estate market, as we know it today, has ended. That cycle has ended. And if you real estate brokers don't understand what I'm talking about because you don't have a PhD, whatever it is, but everything is a market cycle. The cycle begins when President Clinton decided to allow and run on the notion that everyone's going to own their own house and everyone's going to go to college. And that's why he won and became the president, whereas Ross Perot didn't. Ross Perot said he was going to cut taxes, and that would have been the better alternative because people would have had actual money in their pockets, as opposed to creating real estate bubbles. And now the college tuition bubble. That's why college tuition went through the roof. My college was $8,000 a year when I started, and I was able to get a bartending job, another day job, and pay for my own college every year, and my books, everything, and my car insurance. I had a Mercedes. So life was really good back then for students because it was so cheap. That same university, Long Island University, it's in excess of $50,000 to go to college per year. Never mind the tuition, the expenses, the loss of income, etc. So that's the disgrace that happened to us. And the other disgrace was the real estate market. We had the bubble of 08 and 09. That was a prediction. Because when the government opens up loans for everyone, meaning no money down, no credit check, no income check, whatever it was, that was all in the 1920s. It was a repeat of 1929. And of course then after 08 and 09, how do you prop up a real estate market from collapsing even more? You market it to Asia and to Russia, etc. They came in and bought it up. Now they're going to lose out like you wouldn't believe because it will go down by 50%. Ray Dalio is saying this. Everyone's saying this. I had originally predicted a 30% drop with high interest rates, but you have to understand the treasury market right now and what's happening on the balance of power in our global markets. And so once again, the US government has to bring back manufacturing, because raising taxes, even if they do it to the highest amount, which was like 70% in the early part of the century, you can't do that today, because it will create a market collapse like we have never seen it. And you cannot increase taxation, because then the real estate market will even struggle even more, and the entire economy will struggle. What do? Put people on food stamps even more? No, you give them back their money, let them work and gain all their money, get rid of income tax, and then it will help actually the real estate market. Even if real estate has high interest rates, if people have a huge down payment because they're not paying income tax, then they could go and buy real estate. And so that's how you fix the economy. But you also have to bring back manufacturing into the economy to bring back that wealth, so that that market also creates a stimulus type of market, and the government will have the money to pay for the loan that they have, whatever how much that is. And so my market prediction, based on all this understanding, the markets have not gone down enough. And if they continue to raise interest rates, which they do by the first quarter, so by the first quarter, that week or so when it transitioned to the second quarter, of course, companies are going to come out and say, we've lost money, we're not doing so well. And all of this is going to play into a pullback in the markets. Not only that, but there's other indicators that I look at, which I don't tell you, that it will cause the actual stock market to drop. Now, I'm not predicting a 1987 drop. That was because of a computer algorithm. It started selling, and it caused the sell-off of 1987, and it was a mistake. The collapse of 2008, that was because of a huge roaring economy, because we had global investors come into America. We had the real estate bubble. We had so much going on. Secondly, you had the global economy start. Before the 1990s, it was very risky to invest in global markets. But by the 1990s, the end of the 1990s, the global markets, as we know, became more stable. Governments became more stable, and so forth. And you've seen a lot of money being made, whether it was South America, Europe, Asia. And so that created a global bubble that happened. And these, of course, where do rich people, when they're making money outside the country, where do they want to come to park their dough? That's America. America has always been a stable real estate market, the business market, the stock market. Yeah, we have bubbles, but that's normal. And so and you wouldn't want to invest, they wouldn't want to invest in their own country, because you never know what happens. Because their government really is unstable. Our government, don't listen to the politics that happens. It's the people in the government that control our country, and those secret organizations. So when you understand all of this, you understand the big picture, and you can predict what will happen. And this is my prediction. The first quarter of 2023, by the end of that quarter, around that time, I'm not giving you the exact week anymore, or even the exact day, it will happen. You'll have a pullback in the stock market. And I predict an S&P pullback, as well as the Dow Jones Industrial Average. You know what that means, the Dow. So you have to position yourself. Right now, gold is spiking. And if you would have listened to my predictions months prior, you would have made $200 on every single ounce of gold you would have purchased. So again, you got to listen to my videos, watch, understand what I'm saying. I can't tell you everything because I have spent over $650,000 in an education to know and understand all these things. Secondly, I have an intrepid interest in learning. I have an expansive, intrepid ability to see and to be visual and understand puzzles. I love puzzles. I'm very visual, so I have pattern recognition, and that's very important as a trader. You have to have that. And an investor, because if you could predict where the next markets will be, you're always ahead. And so if you listen to my series, if you listen to my videos on market timing, which I think I made 4 videos on that, you will always be in the best place and the best time. And so right now, where should you be? Your real estate portfolio, you should have sold it, number 1. You should be staying in cash. And months ago when I made those videos, if you would have parked it in the gold market, you would have already made $200 per ounce. Secondly, it's going to go up a lot more because of 2023. And not only this, but 2023 is a voting year. Our president may not be the same president that happens in 2024. We don't know what's going to happen. So whether or not it's going to go this way or that way, that's a huge deal. And it creates a market that trades sideways. So for you hedge fund managers out there, if your strategy says that you're going to make a lot of money in a market that trades sideways, those hedge funds managers will actually make a good return. However, the traders that have a strategy, a style that they need a lot of volatility, well, unfortunately, it's not going to always be like that this year. There's going to be the first and second quarter, but by the middle of the year, no. But at the end of 2023, around December, November, you'll know, and the markets will go up. So again, you could prepare yourself for a stagnant market after like the second quarter, and prepare for the third quarter, and then of course you will know by the November who takes office or whatever happens. So this is going to be another very bad year for business people who have their own companies, their own businesses. A lot of layoffs that will happen because of downsizing. People thought in 2020 and 2022, a lot of business owners thought that because of 2020 and 2021, that 2022 was going to be also really good. And it turned out to be a misunderstanding and a calculation. And so for those people who basically expanded in 2021, thought those people are going to hurt. And a lot of businesses who borrowed money because of COVID, because they were closed, that's a big problem. And so now you're going to see all of this unravel. And also, I forgot to mention cryptocurrency. Cryptocurrency has seen its heyday. And with the government regulation that's going to be put on them, as well as when you put more government regulation, the people that tried to hide money and tried to go from country to country, it's ended. So it started in the beginning. People were able to hide money by transferring and paying this one and paying that one without anyone knowing. That's ended now. And because of Asia and the country on north part of Asia, that other country that's at war with Ukraine, they're going to have their own type of cryptocurrency. So that's going to affect the private sector. So, and also you have to remember we had our first collapse, Sam Bankman-Fried at FTX, the platform, as well as his Alameda Research hedge fund. That I'm making a video on, and it just helped me out so much seeing that collapse. Because as a PhD student, we had to study all these collapses, Long-Term Capital, Bernie Madoff, etc. There were so many collapses that happened. Just understand that hedge funds are a very safe investment. You always find out who the administrator is and the hedge fund accountant. And if they're doing their job properly, you don't have an issue. Thank you so much. Please remember to subscribe to my channel. It will really help me out. The button's right there, and also do thumbs up. It's right there on every video, because this is what and how I could make money. And so the more subscribers that I have, the more money that I make. So please do that. It helps me out incredibly, since all this information I give you is for free. And you could back it up by my previous videos that I do make 100% accuracy in my predictions.